Hi, my name is Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I'm absolutely thrilled that you're here. And I know you're going to get tremendous value from the gentleman we're interviewing today. His name's Patrick Antrim, and he's the founder of Multifamily Leadership. Now, he started his career, believe it or not, as a pro baseball player with the Yankees, and I'm going to let him tell you his story because it's very, very interesting. And I know that he's going to add tremendous value today. Patrick, welcome to the show, my friend.
Welcome, Rod. It's great to be here with you. I love what you're doing in the community and just hearing some great things. So pleasure to be here.
Thank you, my friend. Yeah. So you were actually introduced to me by one of the members in my multifamily boardroom mastermind, and she said, "You've got to get this guy on the show." So here we are, and you know, we had a little bit of time before we started recording that you kind of gave me kind of a 100,000-foot overview, but talk about your progression in this business, how you got started, and how you got to where you are today, because it's fascinating, and I want my listeners to hear it, and then we'll dig into some. We'll see where this takes us.
Sure. So, unusually, I trained early in life as a professional athlete. Was riding around in bus rides, playing for the New York Yankees with the dream set out since you were probably 5 years old to achieve something like that. And once I experienced that, I realized after about 4 years that it's a very repetitive, every day, 4 o'clock stretch, 6 o'clock pregame, game time, next day. And it's just, I knew that I wanted a little bit more freedom, a little more control over my life. And I think it was a comedian that said, it's one thing to make the big money in sports, but you want to be able to write the check for that person. And so it kind of opened my mind to thinking bigger. And what I learned was, traveling, back when I retired in 1998. So we didn't have Facebook and social media. So you're on these long bus rides. And on those bus rides, I started to study those that have done some great things after sports. They've leveraged either their name, notoriety, and they were involved in real estate. And so piqued my interest, talked to my agent, and I said, "Hey, listen, I want to really get to know real estate and see what the opportunities are." He connected me with the former owner of the Seattle Mariners baseball team, which for me was the soft landing that I needed to retire and do something significant. So I had essentially the desire to do something big that could prove to all those that doubted me of retiring early. Why would you do something like that? And I took a leap, and I basically
What year was that?
Apprentice.
What year was that, Patrick?
1998.
What year was that?
1998.
Okay, so
yeah.
Okay,
and so I basically had the opportunity to become the apprentice for a billionaire, one of the 700th richest people in the world, and learned how he ran organizations. And for 18 months, I studied him, boards of companies, owned airlines, all these wonderful things, but it all came out of his ability to generate cash flow from the 5,000 units that he owned. And so after 18 months, I thought I was on top of my game, and I knew everything, and I wanted to be the president of the organization. Well, he sent me out into the apartment portfolio to scrape curbs, collect coins in laundry rooms. I became an auditor. I did all the aspects of the business from the ground up. And there were times where I wanted to quit, and I didn't really want to do it because I was like, I didn't retire from the Yankees to do this. And what I learned was I was being taught on how to create cash, how to keep cash, and how to run an apartment business that was built off of people. So they were really good at finding the right people, believing in them, developing them, and getting them to essentially rent apartments for more than the competition. And that became basically my sales organization, learning. So after I did that, obviously had some wonderful introductions from other high net worth individuals, and I've been started being asked to solve business challenges. So I took over companies, multifamily companies, expanded management companies, built management companies, developed properties, nationally ran companies in 13 states, north of $1.2 billion, and started to look at what I was doing in real estate. Had nothing to do with the real estate, had everything to do with my ability to collect the right people, get them working effectively together so they can rent more apartments, right? And when we did that, we had more capital to reinvest in the business, more capital to buy more properties, more capital to scale the business. And so I looked and decided that it was 2009, and I said, you know what, I'm actually running a people management business. So I started to look at multifamily, what was going to happen in the future. And when you look at markets being cyclical, up and down, and tracking trends and demographics and household formations and all of those things, I knew as an investor, at this time, we had collected about 1,300 investors. You know, once you get to that scale, it's like you now have an investor relations department. You have a whole new way of how you want to live life and operate. And I knew I didn't necessarily want that. I wanted to go back to the roots of what this billionaire did. He had 5,000 units and bought airlines. He put, technology on Mars. I mean, he took color photography in cinemas and the black and white, made it color, all from the cash flow from these, 19 properties that he had. And so while I was paying attention to, the multifamily marketplace where everybody wants to buy more, get more, go big, and I realized that you really don't need more than maybe 1,500 units to just make fundamental transformational wealth shifts in your life and the impact you make with others. And so I kind of pulled back, pumped the brakes, and started to look at the business differently. I started to look as an investor, really your job is to look at what's going to happen next. And sometimes the way that we look at deals and the way that we look at markets, we look at what had happened. We look at trailing numbers, we look at historicals, and we making decisions off that. But I started to question the future, the customer, not necessarily the market, where trends are going and things like that. I started to look at what Airbnb did, right to the hotel industry. They're the largest hotel in the world, and they don't own a single piece of real estate. So I started to look at what Uber did to the taxi companies, what Instagram did to Kodak. And the world is changing in how we decide where we're going to live globally. The workforce is changing. So it used to be you would go to, Albuquerque and get a job, work for Intel for 20, 25 years, save up, buy a house. So I think the idea of the home ownership model changes to where the American dream is probably cash flow now, not necessarily owning a home. And so I think there's just tremendous opportunities now in multifamily, not just from the basics and the obvious, which is, buying it, cash flow, the tax advantages, all of those things. Those are the obvious. What I'm focused on is the not so obvious, the customer, what they expect tomorrow. Smart home, operating differently with technology, Internet of Things, basically going into a property and paying more for it if you have to, knowing that you can create value through technology, through understanding how customers want to have a seamless experience, maybe putting leak detection sensors and knowing that your maintenance cost is going to operate differently because you have the right technology and things like that. So I started to look at those things and realize that the speed of change, the exponential growth in these technologies is not anything that one person can understand, right? So I started to develop a platform to collect these conversations and truly just shift my focus to understanding what's next in multifamily. So that's kind of the quick journey, a long story, but I'm can't be more excited about the apartment industry. And I think for small operators, I think that's really where the opportunities are.
Interesting. Well, in fact, that last statement is very interesting. So tell me what you mean by that from smart operators.
So here's the thing.
I'm sorry, small operators.
Yeah,
small
well,
operators.
and smart and small, right? So I think historically, you look at single family, you can finance it, very easily, right? You have a lot of buyers for that, flipping homes, all that. It's, that's easy. As you go up to, even the fourplexes, you can even finance those with similar financing. But once you get into the commercial, it requires a little bit different approach, a little bit different understanding of the business. But what's typically happened historically is the companies that are investing in these technologies and investing in understanding what's next, they've ignored properties 50 units, 100 units even, because it costs too much for them to operate. And the reason why is they couldn't find talent for a small property. 16 units, 40 units, it's hard for a big company to have, they have, fixed property management fees, asset management fees. It doesn't make sense. So they ignore those types of properties. In fact, I used to pick up management accounts from big operators who are like, oh, we've got a 90 unit, we just, it doesn't make sense, right? Like we're looking at portfolios. And so there's been this sort of, disfocus on the small units, 20 units, 50 units, 75 units. But now with technology, the way that you can operate these properties, you're at an advantage. So to me, as an investor, I'm looking at those small deals. I'm looking at
let's talk about. I'm sorry,
sure.
I interrupted.
No, not at all.
So let's talk about some of those methodologies, some of that technology, and let's drill down on how you can better manage a smaller asset like that, utilizing, leveraging technology. Can we drill down on that a little bit?
Yeah. Well, in the obvious, if you're building, it's easy, right? You're already putting thermostats and door locks and these types of things in the property. You already have that cost. So you would just do, right, the most innovative things. But I think in the retrofit and the renovation process, if you're looking at building or managing long-term and owning long-term, then I think like simple things get attention to get rent growth. So before it was, hey, let's do these things because we can get $58 a month in rent. And that's true. That's happening now. When a resident comes into an apartment, there's a lock that they just need a code for, right? They can control their thermostat, they can control their oven on their way home, like from work, they were warming up their oven and these types of things. Then you're able to get a competitive advantage from the property down the street. So higher rents, of course, cap out, that's a wonderful thing. But if you look at it beyond just creating a sort of interesting and differentiation amongst competition, you're looking at leak detection. Imagine a plumbing leak where the resident doesn't even have to tell you that there's a leak because you've installed leak detection sensors in the property. Now your maintenance person doesn't have to go back to the shop, look for a master key or some code to get into the thing. Meanwhile, the place is getting flooded, floor 1, floor 2, floor 3. And the maintenance person already knows where the leak is, right? So they know where to punch the drywall, they know where to get it, and you're minimizing costs. So now you take that into negotiating better insurance. And when you look at the whole picture, there's some real opportunities to explore. What I'm speaking of is smart home. So Internet of Things, this could be from access control to leak detection, operational stuff, just simply not making keys.
What sort of operational stuff?
Well, you can have the impact, looking at, depending on the size of the property, looking at the impact of like having a dog walking service connecting to another platform that allows a resident to say, hey, look, I'm accepting pets. And now, here we have something that no one else has. Like I can get my pet walking service on an app. I can connect that pet walking service to the door at my apartment, and I know who's in, I know who's out, and I don't need to interrupt business as an investor to the leasing agent to hey, I need to get into 101 or package deliveries. With Amazon delivering packages more and more, the grocery delivery. I mean, it's just going to get harder and harder. So what's the impact? Now you have to hire more leasing people just to service the customer's needs. So with automation of these technologies, from simplifying the customer experience, that's important. But beyond that, I think leak detection, there's they're putting sensors on HVAC equipment that's knowing in advance when they're stressing, so then you can preventively get out in front of that, negotiate better rates on the repairs. Because, you think about, you do an HVAC or water heater or anything that goes wrong, it's an emergency situation. It's when you don't negotiate pricing because tenant, resident needs it and you're paying premium. So you got to think with the money eyes and the real estate eyes. The real estate eyes are buy this price, cap rates, NOI growth, all that stuff. But I think you can start to rethink payroll costs. You can start to re-envision the experience somebody can do with self-guided tours. You have AI that can, artificial intelligence that can answer phone calls. A large majority of phone calls to leasing offices go unanswered because offices are closed. But the people that have jobs are working when the offices are open. So your ideal resident maybe wants to look at an apartment at 7:30 at night. If you have the smart home and the access control, you can get people to rent more.
Very fascinating. I mean, you've dropped so many things here. It's kind of hard to
I know, I'm sorry.
and drill down on some of this. No, it's okay. I didn't want to interrupt and just kept coming and coming and coming. So let me ask you a question. And I know this might be tough to answer, but maybe you can just give me some ranges as to, let's say somebody buys a 20 unit, a 80s built product or 70s built product, and they want to retrofit some of this stuff in. Do you have any ideas about what some of these things might cost, like the locks, for example? That's huge, obviously, because then it's all electronic. Somebody moves, you don't have to do anything other than push some buttons. But and even the thermostat business. So start there, but I'm really interested to also dig into if you know any pricing around the sensors, the HVAC and the leak detection sensors. But let's start with the smart home piece, the locks and things of that nature. What does that run?
Sure, I can tell you the ROI is incredible. I won't speak specifically to the actual cost because it really depends on a lot of the platform that you use. But let me back up that question to, sometimes there are things that you need to do on your own, right? And sometimes we look at this as investors, we say, oh, I can do that. I can go down to Home Depot and get a Ring doorbell or, whatever it is. But there are real things that need to be understood here. And you need to be thinking about this as a platform. Versus just plugging things in, because there's a lot going on here with Wi-Fi, Z-Wave, all kinds of different technologies that provide trust and security. And it's not something you want to take on yourself. I can give you a couple of companies you can go to that they've sponsored our event, so I will disclose that. But they've done a great job of really just helping executives understand how to think about these things instead of, you build a new apartment community. You don't just rush out and go to, the lumber store and start building. You have architectural plans, you have engineers and those types of things. I think you need to think about this like another layer of real estate on top of your building that can be capitalized. At some point, I think lenders, and they're talking about it now, will start valuing this higher in your assets, like granite counters, right? So I think, you could be looking at hundreds of dollars for locks, and then it could be, thousands of dollars depending on what you deploy.
Okay, fair enough. So you said it's an extremely high ROI, and I'm assuming you're calculating in saved labor costs. So you're calculating in all the pieces of this. When we do a CapEx on a property, we like to see, something that's going to boost the rents, like covered parking or something. We like to see a 3-year payback maximum, ideally. Okay, we'll go as high as 4, but 3 is our number. Can you do you have any idea of what the ROI on some of these things might look like? And
it's better than any ROI of anything I've ever done before, right? So if you think about those paybacks, those would be a lot longer, because there's a couple of things. The residents are paying for them now, right? Secondly, even if they're not paying for them, you're talking about leasing faster because it's interesting and new, and you have 6 days rented that weren't rented because you just leased faster, you converted better, and then you have the you can operate less business interruption, easier staff time, things like that. I'm not even calculating those things. Just from the dollars in to the revenue in, the ROI is much better than kitchen remodels and those types of things. So, so I think but I'm happy to connect you with the teams that can.
Yeah, well, look, go ahead and name those companies that do these. Yeah. And I'm assuming these companies have platforms and integrate a whole lot more than just some door locks. Yes, that's what we're talking about when you say
absolutely. A couple to mention, and they've already tested this in the single family market, and a lot of these innovations came out of single family because of the necessity, not the amenity. Okay, so they've done self-guided tours, put people in and out of units, converted the lease, all from the apps and the interfaces. But two companies come to mind would be Point Central, which is basically an alarm.com company. So you have the trust and the platform there. And another innovative company is called Smart Rent. And they're a platform, tremendous knowledge. Both of those companies, they've supported everything that we've done. And they're really not looking at trying to sell stuff to you. They're really looking at how do you help them think about the business. Because there's a lot of people that have done these types of things and they're paying the price by, just jumping into it and realizing that, the thermostat didn't connect to a Wi-Fi and we needed to have a different, setup.
Well, this is really timely for me, frankly, because I'm being educated and we've got assets that we are, looking to integrate smart technology into. We've got one in Lexington, and we've got 500 doors under contract right now in 3 states. And by the way, plug, if you're accredited, please text partner to 41411 and get on our calendar. We've got some screaming deals right now. So that's partner to 41411. But yeah, some of the stuff you've talked about here is just kind of mind-blowing in a way, to have your dog walker connected to your app and let them in and all these other things. So back to the sensors for a moment. So I'm assuming that these sensors will be placed in front of or each unit in the water lines and then attached to the HVAC and the hot water heaters have you been involved with that? Is that brand new technology that hasn't been tested yet, or is that in place in complexes right now?
Yeah, these technologies are in place. These technologies are gathering data. And if you just look beyond the world of apartments, this isn't something new. This is, you've got autonomous driving vehicles. You've got all kinds of things that are connecting the world together. And it's just going to better understand parking. If you've got a parking problem, think about sensors at your parking, understanding, you can even create, Smart Rents creating or has created a solution for one of multifamily's biggest pains, which is parking. And so those are the types of things that can be done, but they're already, I think they've done, 70,000 units, 80,000 units already. Wow. Just with some of these technologies. So it's not something where, you're out there taking a risk. The consumer market has these things. Ring.com, Amazon bought Ring.com. You're seeing like security with like Simply Safe and being able to, I'm having my kitchen remodel right now and the granite person comes in. I just unlock the door from the app. I have a camera that I know who comes in. It's a unique code. I don't have to leave my office to go let somebody in and things like that. So it's already happening. And I think that the question your audience might be thinking is, okay, well, I'm not an A property. I'm not trying to be, amazing. I just want to cash flow. I have a property that's in a market that people aren't, expecting these types of things. But the reality is the biggest growth right now is in the B properties because of operational efficiencies. But I just encourage you to think and start being curious about it and start, researching the opportunities, because you'll be surprised when you look at your next deal. You might be thinking, hey, there's something I can create here in terms of that forced depreciation.
Sure, and set yourself apart from the people that aren't forward thinking in this realm for sure, especially in the sub 90 door properties for sure, because that's kind of a sweet spot for this for sure, based on what you've said, and I completely can see it. Now let's shift gears. I mean, that was fantastic, by the way, but let's shift gears for a minute. Let's talk about something I love talking about, which is culture. And so I know that you study this in large management companies and big operators, and you coach on this. Your podcast speaks to this. What's the name of your podcast, by the way?
The Multifamily Innovation Show.
Multifamily Innovation. So there you go, guys. And so let's talk about some of the things you see, some of the best, because I know that I don't know if you give awards, you do things for companies like a glass door kind of a thing where companies are great places to work, and which of course looks great to investors. So what are some of the things, if we can talk about some of the things that some of the best companies you're seeing are doing to create a wonderful team and a wonderful workplace. And so this is not going to apply to somebody that's brand new, so we probably won't spend a ton of time on it, but it's still something I love talking about. So to talk about some of the things you've seen in some of the better companies.
Yes. So, all companies are nothing more than a collection of people. And so it's, an investor's ability to put those people together, even putting the team together to buy the deals. That's what makes you unique. And you're putting together your community, and that's what you're doing to drive impact, right? And so I think what these big companies do, we do research on 8 key areas of these organizations and, nationally. So we have 6 years of benchmark data on what it means to create a healthy organization. I think it's important to always be in tune to the customer. And I don't mean the investor as a customer or your even your resident. It's your employee as a customer. So we all know that if you get your employees lined right and they show up to work excited and engaged, that they're going to show up for the resident. You're going to rent more, and then of course your investor customer gets what they want, which is the yield. So these companies that are doing these great things, I think the power of story is important. And if you think about every product, every job, every investor that you've brought on, every deal that you got, there was a story involved. And in order for a story to happen, there has to be a transfer of knowledge. And so I think companies today, if they can tell a better story about what they're doing to create winning opportunities for the people that are engaging with their brand, people are going to want to be part of that. So to me, I hear people tell me all the time, we can't find good people. We can't find contractors. We can't find maintenance technicians. And the reality is you're probably not telling the right story, because people want to work on winning teams. And if you can show and document through even Instagram, social media, and highlight the people that are winning already where they are, other people are going to want to be part of that. And if you're a company or an investor that can attract the best, think about the yields that can be created. I think that's what it comes down to, story.
I love it. I love it. In fact, I'm creating what's called a vivid vision statement right now for my organization. It's Cameron Harold wrote a book called regarding that topic. And, it just kind of lays out where we think the business is going to be in 3 years and the sort of a team we'll have, and just paints a picture of the future that, is really attractive to prospective team members that we're going to pursue. Are you familiar with that dynamic?
I'm not, but that's exciting. That's exciting work.
Vision statement. It's like a vivid vision statement that just kind of lays out what your vision is for the future. And then we've just got it written, it's done, and we're going to incorporate graphics, and it goes on a page on the website, and it's, perspective anything really, an investor, someone that might be interested in my thought leadership platform, or certainly a team member is going to be inspired by that. And as you said, any good leader that can paint a picture, a vision for the future, and then rally that team behind it, even if it's a team of 2 or 3, it doesn't matter the size, and be aligned, certainly in their core values and things of that nature. That the statement includes the core values, includes a mission statement, and all those things that a whole team can rally behind. That's when these world-class organizations get created, and frankly, and they have longevity as well. So, yeah, I love it. Yeah. So again, your website is multifamilyleadership.com. Very cool. Really, you've dropped tons of stuff. What's another, we've still got a few minutes left. What's another area that you give attention to Well, you talk about leadership, correct? You talk about actually leadership, which we've kind of touched on here a little bit.
Yeah,
expand on that a little.
I think what I see for the audience is I think that investors and even executives that are already running large portfolios, I think that we have to look at, you're running a technology business today. Just look at the way that you get your information on your apps, your phones, you've probably been in an Uber. There's a seamless transition that's happening where if you can make life easier for people, they're going to want to stay with you as a brand. And I think that companies today, executives, investors need to start thinking about technologies. So it used to be just pass it off to somebody to figure out the tech. But if you can pay attention to these things, you can have bigger ideas for your business, operate more efficiently, create some value. And by the way, the leader of tomorrow, the employee of tomorrow wants to work for an organization that has those things. So I think it's just, you have to think about the business differently. And it's exciting because you can learn from what's happened in automotive industry. You can learn that this is happening in healthcare and other industries. You've seen Airbnb and the shared rental market where you just click, and they have your payments. You don't have to, there's no friction, and the experience is great. And so I think that really paying attention to, you're buying properties, you're looking to buy properties. If you can think differently like this, you'll have a competitive advantage to win over other investors, I think.
Oh, I freaking love that, what you just said, because it's really a mindset shift. Fundamentally, that's what it is. And if you think that way, you've got a leg up on the competition. Now, let me ask you a question. If someone is considering a third-party property management company, do you provide anything in that realm as to helping someone, because I know you've hired everybody in the country. You told me that before we started recording, for these assets that you were managing, and we're always, wanting to find the best partners because, you kind of live or die by the people they place at your asset. And
True.
So do you have any thoughts on that?
Well, I've been in that spot many times, and what's really interesting is the first thing I look at is their ability to put good people on site. That regional manager position is probably the most critical position because they're the one closest engaging with the asset, putting that employee on site and making sure that they're excited about their day, all that stuff. The companies are being squeezed a lot too with asset management fees, property management fees. But what I did to combat is nobody washes a rental car, right? So at some point, you get to a scale and you're seeing all this money go out to management. You want to have speed, better control over the hiring process, stuff like that. And that's how companies end up taking management in-house.
Bringing it in-house. Yeah.
But strong asset management, in my opinion, is better. And then you can have third-party management in place. In other words, sometimes investors ask the third-party managers the wrong questions. All focus. Okay, all the results that you create come out of how you focus people. So, for example, if I'm in a situation where my occupancy is down and I have a property that's struggling, 80% occupancy, 85% occupancy, and I'm the owner and investor, and I'm asking questions about things that disfocus a team, then I'm now contributing right to that process. So I think as an investor, you have to be asking every time you talk to somebody on your team that's responsible for keeping the occupancy up is, how did the calls go today? How many, is the phone ringing? All sales all the time. Revenue solves every business problem, right? So
guys, write that one down because that's absolutely the case. Revenue solves everything.
Absolutely. And so I think as an owner and investor, we have to make sure that no matter, you might have there's 3,000 things that have to happen for the deal to, you've got rehabs going on, but you're calling the property manager and you ask them about the roofs, the gutters, and things like that. That's important. But the first question out of your mouth has to always be, what do we do? How did we rent today? What's our vacancy? And really, I think that's so important because most people want to win for their boss or their client, and they start to paint the picture of what's important to you. And they'll start to figure out that gutters and landscaping is important. And usually those are costing you money because they're going to start improving things that, maybe don't even need to improve. But if they know that every time you call, you're going to ask, how did the call go on the last phone call or whatever? It seems micromanaging, but you're basically focusing direction.
That is freaking brilliant, Patrick. I got to tell you, and so simple, kind of a duh, that you direct their focus to where it needs to be directed. By the way, guys, I just created this awesome resource if you are interviewing third-party property management companies. I'm really proud of it. It's a booklet, and it's got links on the back with checklists and a whole bunch of questions you should ask, everything we could think of. If you want that booklet, it's free. Just text management to 41411, and you'll really appreciate that. It's an awesome resource. Well, listen, my friend, it's been a lot of fun. Unfortunately, we're bumping up against a hard stop that I have, which I wish I didn't, because I'd love to carry this another 30 minutes. But thank you so much for your valuable time. You guys check out multifamilyleadership.com, and man, I really appreciate all the incredible value you've added today, my friend.
Rod, it's been great to be with you today. Thank you for following.
Yeah, a lot of fun. Talk soon.
All right.